Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Snap. So, Snap is a stock that has ended 2021 in the red, and pretty much anyone following this name right now has probably negative feelings towards this business. And I'm going to go through and highlight to you that if we push aside any psychological considerations or the ability to kind of market time your entry into a stock, just talking about the business from a valuation point of view, this is probably the most compelling risk reward profile you're going to get from Snap in some time. In fact, if I was going to point it out specifically, I would say that in the past 15 months, the entry point in terms of the multiple compression that investors are getting is the best that they've seen in a considerable amount of time. Okay. Now, here's the thing. In the past, let's say, kind of approximately 80 days, the stock has sold off by approximately close to 40%. So this is something that I want you to kind of think about, right? If that back in October, when I follow stock when I follow Snap, I said, okay, investors are often worried about something. The company missed estimates ever so slightly, and the share price sells off. And as the share price goes down, investors start to build a narrative, and the worries build. Then financial media outlets further sell those fears to sell their own story, and that the fear is what sells the stock. And everyone is just kind of selling, selling, selling. And at the time when I wrote that, the stock was down 20%. And it's difficult to imagine that since that point, the stock has further sold off by another 25%. Now, what does this mean in practice? It means that pretty much anyone that's invested in Snap right now is holding on to a loss. Okay, so that's the framework that I wanted the investor psychology face in this investment. Okay, anyone kind of even thinking about like looking at this article, this video, is more likely than not lose onto a losing stock. And what this means is that as people enter 2022, what they want to do is just forget about this investment, right? And they're just looking for an excuse to sell. So it's a painful memory. They made a mistake and they just want to remove that investment from their memory. Okay, so it's not about the performance of the business any longer. It's just ultimately they're holding on to a loss and just like, get rid of this nonsense. Now, here's the thing, right? So everyone kind of already knows that they're going to come out in Q4 and kind of approximately, let's say, the low 30% compounded annual growth rates for Q4. Okay. Now, why is this kind of not that attractive? Because looking back over the past 5 quarters, this is the lowest revenue growth rate that they have reported. Furthermore, compared to Q4 2020, the same period a year ago, when they were up 62% year-over-year revenue growth rates, for them to be reporting just 32% revenue growth rate is a um, meaningful compression in the revenue growth rates compared to the same period a year ago. So that kind of slowing down of maturing is what everyone is kind of focusing on right here, right now. Also, consider the overall background, right? So in the background, we have so many stocks right now that are seen as COVID winners or COVID losers, and people are kind of just like, okay, Snap is probably just a COVID winner. It's just some kind of let's build up some narrative there and just kind of throw that off. There's also some noise kind of about privacy, and people not really willing to step back and think in a rational, dispassionate manner about what the actual underlying potential of this investment is. Okay, so let's just unpick this slightly. Let's go back and think about what Snap actually offers to advertisers, okay? So let's think about this for a moment, okay? Snap allows an advertiser to reach 75% of 13 to 34-year-olds. So in the Western world, we're talking about 500 million users. So what other platform can you reach this targeted demographic? There is no other, like if you look at TikTok, if you look at, let's say, Facebook, whatever, it's not as targeted as this. I'm talking about the young demographic. And that's what advertisers want. Advertisers want a large audience where they know exactly what kind of audience they're reaching. And that's just what a Snap offers them. But what advertisers want in return is they want a way to be able to measure the success of their ads. And this is where Snap has misfired. So when in the last quarter, in Q3, was the first serious quarter where the iOS changes came into place. And when the iOS change came into place, it made it quite difficult for advertisers to be able to use the tools that they were used to using to measure the success of their ad. So now they kind of had to go on Snap's tools to kind of measure the success on their platform. And then anytime that you went onto a third party platform, they needed to use the iOS tools to measure the ads there. So it was kind of like they had to use two different sets of tools, and when they were just using one, it's just too complicated. So this kind of led to a misfire, and it just slowed down. Now, this is just temporary because Snap's going to be working in the background. Remember, this is a company that's already printing more than 5 billion revenues over the next 12 months. So the question is not whether or not they're going to print 5 or 6 billion. The question is really how quickly until Snap can reach 8 billion in revenues over as a run rate. Okay, so I pointed out, let's move forward, and I pointed out in a previous article that when you look at Snap, you see that it's really improving its profitability profile. Okay, so you see here on a GAAP metric, so the net loss went from negative 200 million in the previous quarter of Q3 2020 to this most recent quarter of Q3 2021, where they went from negative 200 million to negative 72 million. So it's not difficult to imagine that over the next 12 months, Snap will be very, very close or actually reporting GAAP profitability. So it's a company that's growing. We don't know how fast it's growing, but it's definitely growing at a rapid rate on the top line, and it's very, very close to becoming GAAP profitable. It's in fact, I believe that by Q3 2022, it's probably going to be reaching positive GAAP profitability, including stock-based compensation. So Snap right now is priced at 13 times this year's sales. Okay, now think about that. That's the cheapest multiple the stock is priced at in the past 15 months. People have been willing to pay 24, 22, 20. Right now, people are just asked to pay 13 times forward sales. And is Snap going to become obsolete? No, I don't believe it is. And the only question that is kind of difficult to understand is whether Snap is going to be growing at 30% compounded annual growth rate, 40%, or perhaps close to mid 45, approximately 45% compounded annual growth rates. So there's a kind of question about how fast, but it, for all intents and purposes, we're looking at something solidly above 30% compounded annual growth rate, reaching close to GAAP profitability, priced at the lowest price point in the past 15 months. So, as I already alluded to, it's a big company, right? We're talking about a company that reaches 500 million users. And I've often said, don't pay too much attention to the share price. Follow the customer growth rates or follow the user growth. As long as the users are coming, more and more customer adoption, more and more user adoptions taking place, there's clearly something that the company is doing very, very well. And if the company is doing something well, you're getting more users, it's just a matter of time before investors recognize that they're printing so many, let's say 5, 6 billion in revenues, that investors say, okay, probably the share price is too low. And it is, because it's the lowest price point in the past 15 months. Anyway, so I don't have any position here, but if you want to kind of find out what names I'm investing in right now, don't forget to check out my marketplace called Deep Value Returns, where I help you become a better investor. You can check out what other people said, check out my reviews, and yeah, hope to see you soon. Thanks for listening. Bye.